strong handover that we received from the Wall Street, especially on the Nasdaq front, is something which is exciting the Asian street as well.
The Nifty is eyeing all-time highs. That level is 18,888.
The ingredients are in place for a super end to the June 2023 series today. There it is, fresh all-time highs on the Nifty. We're holding above those levels, and as we hit that mark, some bit of an algo trade would have played out.
This flow-driven rally to begin with, where there are many buyers and far less supply.
142 trading sessions and a 4% gain on the Nifty is what it took for it to hit a fresh record high.
Now, once again, we're back to levels of 18,920.
Merger of HDFC Bank and HDFC Limited will be done in July of 2023.
Economists have generally upgraded their forecasts for the full year FY24 growth.
So a lot of promoters have taken this opportunity where liquidity is so strong and flows are so strong to actually go out and book some profit.
SEBI plans to consider in today's board meeting, and that is with respect to total expense ratio regulations for mutual funds.
Are at the 19,000 level. What a charge it has been from the Bulls Brigade. Indeed, that's the day so far. It has been a day for the history textbooks. So we've seen records come and records go, and a long wait for the Nifty has come to an end. 21 months is what it has taken for the index to move from 18,000 to 19,000. You've just seen snippets of the day so far, and it's been a day that belongs entirely to the bulls. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surbhi Upadhyay. With me on the show, Reema Tendulkar, and of course, Nigel is watching that bulls party very, very carefully from the newsroom, and we'll have Prashant joining in just a bit as well. But guys, what a day. And it's been chart busting to say the least.
Absolutely, and no signs of profit booking whatsoever, right? Typically, when you get to these all-time high levels, there is some element of profit booking. Some people would say, well, I've made so much money because the mid-caps and small caps have done so well. But this time, there is no sign of that.
And I think Nigel's getting ready for a really big midweek party. And the Bulls have beaten Nigel to it. They've started the party already, Nigel. That's what it looks like looking at the screen.
Surbhi, we came back from your birthday party yesterday, and now we have that holiday that we were talking about. So hopefully you're going to treat us big time, maybe on Friday, maybe today. I mean, we're always ready for it. But the big party really is on Dalal Street. And at the start of today, we had made this point. The ingredients are in place for a big rally, and that's precisely what's taken place. So rather good going on that front. And, we also said, good things, they take a lot of time. It took some time, but in fact, fresh all-time highs are here. So let me just run you through a quick chart that I put up then. It's a bazooka end to the June series. Yesterday, you had the bears that got stuck on the wrong side. And now the call writers, they're being taken to the cleaners because the positioning was such that we don't get past that 18,800 odd mark. All of a sudden, we're at around 19,000 odd, and that's evident. 18,900 call, you pull up that strike out there. The premium yesterday was 9 rupees. Today, it's closer to 90 rupees. So those call writers, they've been taken to the cleaners. You also pull up the 19,050 call. There is a bit of a punt that's taking place over here. In case things go right and we get another 50, 70 points, then you'll make some money. Premium's only around 7 rupees, 6 to 7 rupees out there. And on the downside, the 19,000 put is seeing some writing. The premium's around a 40 rupees odd. So upsides can be anything. But I think the bulls have positioned themselves such that 18,955 gets protected on the downside. So that's your stop loss on the downside, crucial level on the downside, and upside. Sky's the limit, I think. So what else are you looking at?
I'm just looking at the ticker, Nigel, and our ticker teams had a really busy day. They've been just belting out those lines and those record levels pretty much by the hour. Just want to pull up the list of Nifty winners, and we'll do that in a bit. I mean, what's also important to note that this is actually, of course, we're celebrating all the levels in the rally here, but it's a very nice-looking global screen as well. You had a lot of the markets across Asia move higher. Right now, Europe is up anywhere between 0.5% to 1%, depending on which market you're looking at. So it's a good-looking global screen right from the Wall Street action that we had overnight. Those are some of the regional markets, how they ended up. Of course, Japan's had this relentless rally. And right now, CAC, DAX, most of those markets are up between 0.5% to about 0.75%. On the Nifty, the good news is that now the bank Nifty is in full form, but it has so many other constituents to it as well. The metals index is led from the front, and you'll see that as we pull up the list of Nifty gainers for you, the metals index has had a good run, IT has had a good run, and of course, we've got biggies like Reliance. So pretty much all parts of the market firing. Okay, there we go. That's a nice looking screen. You've got a green bull out there, and it tells you exactly what stocks are leading it. These are the biggest movers on the Nifty as we speak. Adani Enterprises, Adani Ports, of course, Adani Group in focus because of some block deals as well today. IndusInd Bank, L&T, Reliance, the entire lot, SBI, Infosys. HDFC Life is the only stock worth mentioning on the way down today, and there's a lot going on with HDFC Life. We know about the block trades that have happened, but more on that later. It's also a good time to welcome in Prashant. Prashant, come join the party.
Where are the hats?
All the T-shirts.
All the T-shirts. But, you know, by the way, did we make new highs, or are you guys still talking about
19,000 thereabouts, yeah.
Well, just making sure. It's a fantastic day, right? I mean, and this coming up ahead of the holiday, which I think makes it even sweeter for most. How should you position yourself now as we approach the last 60 minutes of trade? That's the question. Mitesh is with us with exactly that. Mitesh, hi. Good afternoon. What does one do now?
Good afternoon, Prashant. So I think, the rally continues. I think today's gap up held very well for the Nifty, and 19,030 is what we had indicated as the target area. 19,030-50, I think we should hit that zone. If we can start getting past that, then I think 19,200, 250 should happen very soon. So no threat to the bullish setup over there. The only precautionary thing which I would suggest is to trail your stop losses now to about 18,900 and see if the rally can extend on the upside. It certainly looks like that. On the stock side, Maruti is something which has come on radar. That's a buy with a stop at about levels of 94.80 and a target of around 90,700 can be looked at. And then the other one is Syngene, which after a pullback of few days is again picking up steam. It's a buy with a stop at 730 for target of 770.
You know, the good part about this rally is that the retail investors would have totally benefited from him. If you map the flows performance over the last couple of months, you would have seen that the FIIs were sellers in December, January, February, and they were big sellers. In the month of January, they sold about 41,000 crore rupees. But the DIIs, they've been buying at all those low levels in January, in February, in March. And now when we've come to these upper levels, they've enjoyed the full benefit of the rally, and that's reflected in the kind of outperformance we've seen from the mid and the small cap index. So portfolios this time would truly be shining, with the small cap index up 12.5, close to about 11 to 12% so far year to date. The mid cap index is up close to about 12.5% year to date. So unlike the FIIs, who actually exited at higher levels in the month of December and January and only been entering in again once the markets have gone back to those all-time high levels, it's the retail investors who've been participating when the Nifty went down to levels in the month of February, in the month of March. They've been very steady. So portfolios this time would be would be enjoying the benefit of the rally. So that's actually a very good thing that we've seen. And if you pull up the contribution plate, you would see that there is no one stock, no one sector which is having an outsized contribution to the up move. It's been a very broad-based rally. That's the contribution plate. The top gainer is Reliance, contributing 27 points, which means about only 15% of the Nifty rally is courtesy the top gainer. So it's an across-the-board rally that we are seeing. There is no one big company, no two stocks which are contributing a chunk of the portion. But let's, get to an important story. That's the Adani Group stocks. We learned from sources that investors buy Adani Group shares worth $1 billion in today's block deals. Nimesh is here with the details. Nimesh.
Hi, Rima. So, this deal was in the works for the last many days now, and finally it's been done. In two companies, especially Adani Enterprise and in Adani Green, the Adani family promoters have sold stake worth $1 billion, and some marquee names have bought into the block deal as well. So, in terms of buyers, I understand from sources, GQG is one name which can feature in that list. There is another Dubai-based company called IHC. That's going to be a large investor as well, is what I understand, in today's block deal, wherein they've bought stake both in Adani Enterprise and in Adani Green as well. Now, if you look at the past history, post that whole saga, GQG had put in $2 billion, and now they've committed another $500 million, is what I understand. So, close to $3 billion is what the GQG has put in the Adani Group in the last many months. And today there was this Dubai-based fund, which is IHC. Even they've invested in Adani Green as well as in Adani Enterprise. So, confirmation, so to speak. We'll get the block deal data in the evening. But sources do suggest that some marquee names, including GQG, was buyed in today's block deal in Adani Group stocks.
All right, Animesh, very, very interesting. Thanks so much for that. Yes, we are going to await data from the exchanges for the final, official names to come through. But thanks for it. And there you see, Adani Green is the one that's negative, but Adani Enterprises Sports, some of those other stocks doing pretty well today. Prakash Diwan is our first guest on the show. Prakash, so monsoons in Mumbai and it's raining gains on Dalal Street. Have you already started the party at your end? Or are you waiting for maybe another couple of 100 points? The rate at which the Nifty is going, who knows,
Yeah, no, absolutely, Surmi. So, I think for a change, new highs haven't just made headlines, but as Rima very rightly put, it's made money for people as well. Usually, there's always a dichotomy. You have indices going and making new highs and the portfolios still don't look bright enough. But you've got the mid caps, large caps, small caps, and of course mutual funds as well. I mean the DIIs probably have raked in big time this time, and it's all thanks to kind of flows from FIs that the market is finally rewarding all the patience put in distressed time. So it's a great setup. And if you ask me, the market is now going to start right next week onwards. You have earnings starting off, and unlike what the expectation is on IT being soft, which was soft for the first quarter, for the last March end numbers, it may not be as bad for this particular quarter. So you could probably start looking at some sort of a move and leadership come back from within banks and IT, from all the other sectors that you're seeing flying. So it's likely to continue unless there is a disruption or some sort of a news flow from the overseas market which sours the mood. But the rating upgrades, the subtle acknowledgement of the fact that India is a far more qualitatively superior power, not just in terms of size of the economy and all. So all of that will probably see some more flows come in, and the party could go on.
Okay, all right. Prakash, I wanted to ask you about this. One of the biggest losers actually in the last 10 minutes is HDFC Life. You're waiting for HDFC Limited to go ahead and buy that stake. Yesterday, we had an official release of around 1.5 crore. Just an hour or so ago, there was another large trade of around 1.7, 1.8 crore shares. And post that, the stock has fallen close to around 3% from the top. I remember from the lows that we saw in the budget, during the budget, the stock went up by 25%. What do you do with the stock at these levels of around 640?
No, so, Nigel, we spoke about this briefly in the chat. Surmi and I had a little bit of a chat on this in one of the shows. It's very clear that HDFC Life has done so well. It's been probably the sharpest beneficiary of this sudden love that we found for life insurance plays after that budget disappointment. And that's why there's a rotation that's happening. So if you are an investor and not compelled to buy HDFC Life, because the blocks are more on account of the reset that the entire merger is creating for HDFC Bank. But if you were to buy into insurance names, you still have the SBI and the ICICI Pru to choose from. And that is where the market is kind of heading to. It's making itself much more stronger in terms of its allocation to the likes of SBI, which haven't fallen, which haven't done too bad, but still have a lot of value. So, and I was talking about this whole thing that every product, every life insurer will now start focusing on a new line of revenue, new stream of revenue, and that's annuitization. So insurance will take a different, look in that sense going forward in the next few years. And most investors would want to look at who actually makes the most of that opportunity. Right? So I don't see there's anything other than the technical reason. The expectation was the buying would have been much more significant, but it doesn't seem to be happening. And this whole weighted change that we were expecting for HDFC Life to have favored had a lot of positions, and those are probably easing out.
Prakash, to stay on, want to talk about Tata Motors because that is surging in trade on the back of a CLSA target price increase. So CLSA has raised the target price on Tata Motors to 690, and that's because they are now forecasting higher margins for their JLR and their CV business. Because they're doing that, their earnings estimates have gone up by 11 to 18%. So first, let's talk about the JLR business. CLSA is saying that JLR's EBIT margins will hit 6%. One, because 2/3 of their product portfolio or their order inflow for the order book for the JLR business comes in from higher margin models like Defender, Range Rover Sport. And secondly, incentives are subdued. So they are now expecting higher margins of 6% plus for FY24 JLR EBIT. Secondly, on the CV business, they're saying the CV business EBIT margins could also improve because commodity prices have declined since Q4 levels and pricing is stable. So CV EBITDA margins are seen at 10.5% according to CLSA for FY24, which is in line with the management's guidance of double digit. Prakash, Tata Motors has really enjoyed the investor enthusiasm, euphoria surrounding EV. It's been the top nifty gainer this year with a rally of more than 50%. How much more from here? Because now competitors too are getting aggressive with their EV launches. They may not be launching with products comparable this year, but by FY25, you would be having comparable products from the Maruti stable, Hyundai stable, etc. Yeah. And then it will be difficult for Tata Motors to enjoy this 80% market leadership that it enjoys in the EV business. How do you rate Tata Motors after this kind of a rally?
No, very valid point, Rima. The EV market share may not optically remain very robust, but the size of the EV, market itself is growing so rapidly. And, Tata Motors definitely should get credited for having introduced the most affordable price points within the EV space. I mean, if you look at some of the new vehicles that they've come up, they're far more superior than what anybody else is doing in terms of delivery on a particular price point. And I'll tell you what I like about the entire setup is that the mass passenger vehicle market is what they have started addressing in a very beautiful way with fresh launches, building on that platform that they started getting success with the Nexon, the Punch, all of that. But it's the high volume, the high value JLR portfolio that actually makes more money. Yeah, and that is something which is absolutely not ebbed at all. There was an expectation that things would kind of not be so positive out there. But you talk to any of the showrooms, dealerships, and in terms of the kind of weight that still exists for some of these models, it's I think a very calibrated move to only sell high value cars to the right segment and make your money out there, while the passenger car introduction keeps you busy with, keeps you present in a segment which is anyways very promising. There is competition, there is going to be disruption, all of that's there. On the stock, my view is it might not be such a great utopian situation for it to go to 690 in a hurry. Even 640 was a bit of a optimistic level. So it will probably take its time to move from here on. But it doesn't have much of a downside. So that's exactly why nobody's wanting to book profits in spite of that sharp run-up that you see.
Prakash, thank you very much for joining us on this momentous day. Enjoy your holiday tomorrow. Look forward to chatting on Friday. Get into a break. On the other side, we'll be joined by Amit Gupta of ICICI Securities. Stay tuned.
Welcome back. Things are looking pretty good, and we are at 18,980, 163 points higher. By the way, the market breadth has narrowed a little bit. It was overwhelmingly in the positive, but I mean, it's more measured now. 1,200 stocks are higher, and nearly 1,100 stocks are lower as well. But as has been the case, even when the breadth is negative, volumes are with what's going up. List of volume-led losers is pretty small. Look at that. I mean, it's almost a V with the advanced decline converging now as we approach the last 40 minutes of trade. Amit Gupta is with us, Senior Vice President and Fund Manager at ICICI Securities. Amit, good to have you with us here. Thank you very much for your time. For viewers who are watching and, watching programming around all-time highs and 19,000 levels, and, tomorrow morning newspapers will have the headline, not just pink papers. What should be the mindset for investors? That this is the beginning of a larger move higher, or one needs to be a little more measured, a little more watchful, don't take the eyes off the ball. Let's just begin there.
So my sense is, at least for a couple of months, this kind of exuberance is likely to continue. So why I'm saying this? Because if you look at the global markets, because they also supposed to be they should also be stable in case the emerging markets needs to keep on outperforming. So if you look at S&P numbers, so this quarter, the quarter 3, July, August, September, so we believe there is an expectation of the revival in the earnings over there. And that is where for July and August, I think the market should remain fine. And if there is some disappointment, that will be out actually after September. So in that case, afterwards we can see some sluggishness. So that is one point. Second, I think definitely some macro tailwinds are in favor of India right now. Our current account deficit, which was very scary towards the last quarter of the last calendar year, now it looks much in control because of the lower crude prices. So it is expected for financial year 24, it may be 1.9%. That means below 2% also. And I think that is why the currency also can remain stable. The FI flows, can continue, which we are seeing for the last 2-3 months. I think, and that is where, if you look at the earnings in Indian markets now, so last quarter 4 financial year 23, we have seen one of the best quarter in the last 2 years. And this has happened because the commodity prices are down. And in that case, I think if it remains low, the coming 1 or 2 quarters again, you will see that kind of margin expansion continuing. And that is not the only surprise. I was surprised to see the sales growth also in the last quarter. And I think that is where more stock specific kind of move, more stocks coming up in the mid cap space. Also, you are seeing good participation coming up, and it's a good sign for at least few months now.
Hi, Amit. Good afternoon. Nigel on this side. Amit, let's get to the stocks then. What have you all been buying? I mean, give us a couple of stocks where you all have increased the allocation, or where you all have decreased as well allocation, say in the last couple of months or so.
So yes, so very stock specific. We need to have mid caps in the portfolio. That is where you can create alpha. That is very clear. And there are a few segments like industrials, like housing related segments, where you need to increase your portion, and also some of these stocks from the power space. I think these are the sectors where we are looking more, and we are adding positions, particularly from the mid cap space now.
Okay, so looking at some select mid caps, just want to get your thoughts on the defense space as well. Because Amit, what we've seen is this humongous rally play out. So it's but natural that people start getting a little worried whether you should still look at stocks like HAL or a Mazgaon Dock or a Garden Reach. No one's denying the underlying sort of positivity or the opportunity, long-term opportunity. But just in the near term, how should one look at defense?
So I think that the sector is definitely very good, because whatever the government was expecting to have in exports 13,000 crore, it has clocked in almost 16,000 crore, and going forward they are expecting 35,000 crore of exports. And if you look at the Southeast Asian countries also, so India is increasing the exports over there, and they have started getting some technical guidance actually from the developed nations. So overall, India, from the pricing point in the defense space, it is at a sweet spot, and they are going to take benefit out of this. But when I look at the valuations now, I think it is a little stressed, particularly in this segment. I think almost more than 40% of move we have seen in a single month in these stocks. And that is where I think if you are not leaving this space, at least you need to have your more research required now. And that is where I think some private players, for example, Bharat Forge may be the one, which still I feel a lot of juice is left looking at the current setup, because after the recent last quarterly results, we saw the stock had declined. It declined because it was a little lower than the market estimate. But now I think it has spent enough time near 760 or 800 levels, and it has started moving up. Last time it was near 900, so almost 150 points of decline, and now I think it is gearing up. It is gearing up because it is more in defense. It has done really well over there. The artillery guns and the armory, what they are talking about. Next, I think in the auto ancillary, forging is really picking up very nicely now. So whatever auto ancillary themes we are looking at, forging is one of them. And that is where I think this company is going to benefit from both the fronts. And a long time we have seen it has been consolidating around 600 or 800 kind of levels for the last many years. I think the time has come possibly now it to outperform. And that is where I think the canvas is placed now. Once you have already seen some other stocks in defense already participating, I think it may be the next contender now in this space.
Forging space, got that. Amit, what's the expectation from Q1 earnings in terms of revenues and margins? And is there a possibility that, the earnings performance may not be as high as what the street is anticipating? We could have some downgrades, which spoils the party. Take us through the nitty-gritties of what the street is expecting in the Q1 earnings picture.
So I think the street has started expecting at least the margins should be better. And that is where actually the EPS growth of some kind of increase we have already started seeing. It is not a very significant increase yet. So 2 to 5% of increase we are seeing actually in the EPS now for the coming 1 or 2 quarters. And that this is where actually number of stocks, if not Nifty, but if you look at, for example, from the power space, we have seen the companies from the distribution space now are really picking up. The companies which are increasing their capacity in renewables. So for example, look at Torrent Power. So this company, there is a very clear EPS upgrade that we have seen now in the recent period. It is expanding its renewable capacity now substantially. We believe that another 20% of jump is very much likely now. And on the top of it, if you look at the distribution, so in whatever circles they are, for example, in Gujarat, in some parts of Maharashtra, in Agra, UP, in Daman, Diu, so we have seen everywhere there is a good surge in demand. And this is where this company is going to benefit when the gas prices are low, because it gets gas for the power plants also. And when the gas prices are low, it gets a good fair price for that. And I think this is where overall earnings are looking to kick it now much better. And the stock possibly may be moving towards 750 or plus kind of levels. So we have taken in our more consulting portfolios now for the clients.
Amit, by the way, have you ever owned Indigo? Do you have any views on Interglobe? I mean, the stocks, the companies hit 1 lakh crore market cap. It's up 5% this week, 10% this month, and some 40% from the March closing levels when the market rally started. I was reading a IIFL note. They are expecting 50% upgrade to full year consensus earnings after first quarter numbers. Any thoughts at all?
So my sense is the stock is going beyond 3,000 possibly now in the coming quarters. Why I'm saying this? Because definitely there, as you said, there is a good tailwind now. The crude prices are down, which contributes to more than 50% of the airline business. The passengers moving around, whether it is the international passengers or it is the domestic passengers, that is definitely picking up now. And this is where you have very limited players now in this particular industry. It is same like what you have in telecom. And the same thing is happening in airline now. If you look at Tata's and Indigo, they hold more than 85% of market share. And this is where everyone is ordering record high actually numbers for the fleets. And I think this is the direct benefit to the company. The only thing is the promoters, sometimes they want to exit from the company at higher levels. That can create some kind of volatility. But overall, the kind of passenger surge we have seen, it is just close to the pre-pandemic now. So whatever decline had come, it is already cover up. And now you are seeing more corporates moving out. They are moving out actually for expansion in the business, meeting the clients and the international passengers, and then the medical tourism. So everything is starting now in India. And I think this is where this is a direct beneficiary of that, especially when the crude prices are lower.
Okay, all right, Amit, thanks a lot for joining in. Well, it's been a dream run, right? Last few years from 40% or market share going to over 60%. Everything going well for them, right? One player stepping out of the way, crude prices cooling off, and the unlocked trade playing off pretty well in their favor. Thanks so much, Amit, for joining in. But it's that part of the day when we want to know what's going on into dealing rooms. And that's time for our special segment, The Street Chatter. Nimesh is with us. Nimesh, finally, the markets kept teasing us within 1 point, 5 points, 8 points. Today, in the start, only hit it out of the park. And then from there, it's been a pretty good session, actually.
Pretty good session, so to speak. We are at all record highs. Something for us to cheer as well, right?
Yeah.
We've been waiting for so long now. That's finally happened. But, the interesting feedback is now at these levels, looks like the focus is back to the large caps. And remember, in this entire rally, the large caps have relatively underperformed the broader markets, right? So that seems like the first signs of some bit of money moving back to large cap from the mid cap. That's the feedback. Even in today's trade, the flows are mixed, is what I understand. But for the second day running, the bias is clearly towards the power PSUs. That was the feedback yesterday as well. And we see what kind of reaction we're seeing in stocks like PFC, REC, NTPC, all are buzzing even in today's trade. I guess that today's FI data will look very large because of some large blocks, including the Adani $1 billion deal. Also, there is a small CPSE rebalancing, so that's also going to have an impact on the overall FI flow, so to speak. But, as I said, the money is moving back to the large caps. Just look at the momentum in the mid cap and small cap. You're seeing some bit of profit booking now. We've lost some bit of momentum in the mid cap and small cap today. I was looking at some recent movers. Everybody is down 3, 4, 5% in today's trade. So it looks like at record levels, some bit of profit booking, which could be healthy for the markets. But clearly there are signs of money shifting or the focus shifting back to the large cap. So I wouldn't be surprised that from here on, for the next few days, you might see a big outperformance in the large cap laggards which have not done well, and they can do a bit of a front foot batting, so to speak, for the Nifty and Sensex. So that's something to track going
I think par for the course, Nimesh. Now, for the kind of outperformance, some bit of consolidation, the large caps get a larger part of the share, so be it. But even in this sort of a market, Nimesh, there's a lot of news, whether it's blocks, fundraise. So tell us, pick up the top list.
So as you said, a lot of news, so to speak. The first stock on my list today is Suzlon. We've seen a big move in that stock. The management has been meeting as well, I believe, some large institutions, and the indication is that maybe the company is looking for a fundraising via QIP very soon. So that's something to track in Suzlon going forward. The second stock is Bikaji, recent listing. There's a large block in today's trade, some 3% equity had changed hands. I believe the promoters and private equity investors were selling in today's block, and some domestic mutual funds were active buyers. So the disclosures could be important as to who bought and sold. The third stock is Manappuram Finance. Again, this is one stock which has been consolidating. A lot of news as well of late, including the ED thing. Now there is an indication that there could be a large block in Manappuram Finance very soon. Remember, a large private equity investor owns a very large stake, close to 10%. So there is an indication that some block can come from the PE investor. And the last stock is EPL. This is one stock which has been buzzing off late. In fact, I guess this month the stock is up to 25%. This week the management actually met some large institutional investors, and there is a general buzz of some bit of activity picking up at HNI desk as well. So buying interest, and that's why EPL is buzzing in trade today.
Okay, all right, Nimesh, thanks a lot for that. Well, for the time being, though, we'll slip into a short break. On the other side, we'll be joined by Trideep Bhattacharya of Edelweiss Asset Management, and we'll also get you some buy or sell calls from our technical experts. Stay with us.
Welcome back. Some updates. What we've learned from our sources about the new Bajaj Auto Triumph launch. The pricing will officially be released and revealed on the 5th of July, but we understand it's going to be less than 3 lakh. In fact, let's talk more about it because today Bajaj Auto and Triumph have launched the first products under their partnership. The new Triumph Speed 400 and the Scrambler 400X have been launched in London. With this launch, the competition in the 400cc segment is set to hot up. Bajaj Auto will take on Eicher Motor and Hero and Harley Davidson's upcoming X440. So what will be the pricing strategy? To understand more about these flashes that we can see on a screen, let's go across to Parikshit. Parikshit?
Well, clearly 400cc will be the new battleground for India's motorcycle makers like Hero MotoCorp, Bajaj Auto and Royal Enfield. Royal Enfield was already in the 400cc segment with the Himalayan, but they're now working on a 450cc segment. Coming to Bajaj Auto, and this is significant because Bajaj Auto is possibly looking at a pricing of the new Triumph motorcycles, which could be under 3 lakh rupees ex-showroom. So that could be quite aggressive, keeping in mind the products in the market currently. We hear that they would even try to keep it around 2.5 lakhs. Remember, the Himalayan 411cc costs around 2.3 lakhs ex-showroom. So Bajaj Auto may also want to keep the pricing somewhere very close and somewhere very competitive for the consumer. The Triumph is being launched in 2 models. One is a Roadster, a 400cc Roadster, and the other would be a Scrambler or an off-roader for off-roading enthusiasts. Bajaj Auto, we're told by our sources, has a current installed capacity for Triumph motorcycles at 5,000 units per month. This is scalable to 10,000 per month depending on the demand and export offtake. Remember, this Triumph motorcycle will also be exported by Bajaj Auto to global markets. Bookings and sales for this motorcycle will begin on the 5th of July. Now, why is competition going to heat up? Harley Davidson is going to launch the X440 on the 3rd of July, that is next Monday. And this is a bike that they have made in collaboration with Harley Davidson. Harley Davidson and Hero MotoCorp had come together for a partnership 2 years ago, and this will be the first motorcycle out of that partnership. And the same platform will be used for a Hero MotoCorp motorcycle in India and for global markets as well. Royal Enfield, which has already been present with the Himalayan 411cc, is working on a 450cc engine, which could be launched sometime this year. So there will be a lot of competition in the 400cc segment, but Bajaj Auto, their launch is on the 5th of July, and Hero MotoCorp is launching their Harley Davidson motorcycle on the 3rd of July.
All right, very, very interesting, Parikshit. Thank you very much. So there are some mean machines out there. Before I introduce our next guest, Nigel, which one are you buying? Just again, so we want to, ensure we block our party as well. Whatever is the date, we're here for the party.
Sulbi, you all will track the financials, the numbers, the capacity, the number of units, and all of that. I'm going to just track the pricing, and I'm definitely going to go ahead and test ride this. It's a 400cc. I ride 650cc Royal Enfield right now. But as Mr. Rajiv Bajaj told me, Nigel, you have to shift at some point of time. So I'm going to give this a bit of a go. Let's see how this goes. I'll try it, I'll test it, and maybe I'll give it a go as well, because it's a Triumph after all. Dream bike for a lot of us bike enthusiasts.
Well, the markets are definitely revved up. And I think the fact that the pricing, and Mr. Bajaj gave us a hint of that on the show on Bazaar when he was there on World Yoga Day, where he said that, in the interest of obviously the way the market's trending right now, they will try and see if they can bring down the price to sub 3 lakhs as well. So lots of action in the motorcycle space. With that, let's introduce our next guest on the show. Trudip Bhattacharya, Chief Investment Officer, Equities at Edelweiss Asset Management, is with us. Trudip, thank you so much for joining in. And it's a happy situation for the markets, right, as we're getting into this midweek holiday. I've been thinking, usually when indices hit all-time highs, one constant complaint we get from fund managers is that, there's a lot of money chasing too few stocks, and it's tougher and tougher. It's getting tougher and tougher to find stocks now in the market. That narrative is absolutely absent this time around. You guys are not complaining. Why is that? And what's the sense from here on, especially on mid-caps?
The short answer is maybe we got our stock selection right this time. So I think when we get there, other stocks are going up, but as long as ours go up slightly more than others, we are a happy bunch. So far so good. But I think, look, it's good to see markets at all-time high. But in a sense, last 2 or 3 months, we have seen basically easing off of macro worries and more global factors than otherwise. I mean, a better sense of rates peaking, and also the fact that inflation is gradually coming off has led to a slightly better macro conditions. And what has worked out in India's favor maybe over the last couple of months is that the China growth, which was expected to be red hot, is probably not so, is perceived to be not as much as we stand now. So some of the flows from overseas has kind of, is attuned to that. But I think the recent round of bullishness, I would attribute, and these are all short-term guesses, my guess is as good as anyone, is that I think one of the worries that we've had is a weak monsoon, El Nino, this, that, the other. I think the spread of the monsoon over the last week or so has been probably slightly better than anticipated. Now, too early to sort of call triumphs, but one of the few worries from a bottom-up India story has been a weaker monsoon, and a little bit of let-up that is probably kind of being celebrated in the markets as we speak.
Although we have seen a fair amount of monsoon in the last rains in the last 1 week, BMC has announced that they will be imposing a 10% water cut across Mumbai from the 1st of July because the water in the lakes currently is quite inadequate. So it's been a late start, but it's still not yet, good enough because we will have to see those water cuts of 10% from 1st of July. Trideep, so, back to the markets. Are you comfortable investing at these levels, or would you just like to wait for, some lower levels? And if you are comfortable buying, what are the pockets of interest?
So as a fund manager, I can only invest at current levels. But I would say...
But you can hold on to cash.
Yeah. So I was going to say that over the last 2 or 3 months, as I was saying, the loosening macro has taken most of the stocks up. And it's been a broad-based rally, which is what I think Surbi was mentioning, that none of the fund managers are complaining. But I think as we hit the result season, I think the pockets which would seem relative earnings resilience would be the ones which would probably still kind of hold on to their gains, and there might be others who might probably either underperform or go down, or whichever shape or form it takes. So the idea from here on is that as we head into the result season, it might get a little more selective, it may get a little more oriented towards wherever the earnings are coming, and that's where our focus is really from a near-term standpoint. That we are looking to focus on the pockets of earnings resilience. And as you said, the pockets of earnings resilience are most likely not going to be IT services, but most likely would ride in the manufacturing side of the economy. And while valuations are on the higher side, net of valuations, wherever we see earnings resilience, that's where we are sort of focusing our attention on. On the other hand, select consumption stocks where stocks have probably hit the bottom, or maybe sequentially things might be a little better if the monsoon situation improves, are the other areas that we are incrementally looking at. But these are very subtle, small changes that we are looking to make. As you would probably understand, the portfolio construction is usually done from a medium-term standpoint. We only change so much from a near-term standpoint. But to the extent that we do, these are the areas that we are focusing on.
Okay, so do you think market expectations of a margin expansion in the upcoming quarter could be a little more optimistic than might play out? What is your feedback thrown out? Because if that doesn't play out, then there could be some earnings disappointments and markets could come under a bit of pressure. Can you give us some channel checks based on your conversation with corporates?
Yeah, I think that's a good spot. I think that's the focus of the research. And I think clearly commodity prices have been coming off. And when I said earnings resilience, I didn't get specific, but that's one of the areas that we are hooked on as to the areas that we would see a margin uptake come through. My suspicion is that on net balance, a better part of margin recovery might be in the next quarter, not in this quarter. So to answer your question, this quarter numbers in the form of margin upgrades could be a little bit lower than anticipated, but overall the guidance for the next quarter from a margin recovery standpoint might be a little more optimistic. So net, it might be more balanced from that standpoint.
Sudeep, it's a pleasure. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. Well, I think Mitesh is with us now to run us through, what he would want to do now. I mean, as we head into the holiday tomorrow and then, of course, come back for Friday session. Mitesh, what's the fresh reading on the screen and what would you want to do?
Reading remains very optimistic and positive, though I think, in the last few minutes, there's mild sign of profit booking. But again, looking at the rally, which started, yesterday, I think this is hardly anything. So stay long. I think, as I said, on the Nifty trailer stop versus to 18,900, which is about 75 points lower on the spot. And similarly on the Bank Nifty, if you look at the historical chart, Prashant, the Bank Nifty topped out around this 460 mark on an hourly closing basis on the 30th of May. We haven't had an hourly closing about that. So maybe take some profits over there. And if it starts getting past 44,500 on Friday, then I think take a fresh long. I don't take a long position. So that's the way we'll approach it.
Any stocks, Mitesh?
So on the stock side, Rima, I've already, given a couple of calls earlier, but now as a VTST, I think Reliance can be looked at. I think that's a stock which is showing good traction. So I'll take a stop at about 25.15 for targets of around 25.50, 55. And Piramal Enterprises, in fact, both of them are similar kind of companies. So Piramal is a VTST with a stop at about 940 for targets of 970.
Okay. Thank you very much for joining in. Need to slip into a very short break. On the other side, we'll invite Mayuresh Joshi of William O'Neill.
Welcome back. We'll just focus on a few stocks. There is a NSE quarterly rebalance and an IFL note. Well, they are saying that that's what could lead stocks that move up. The ones particularly that the weightage is going up. Syngene, Chola, just pull up the intraday charts of these stocks, and Godrej Consumer. All three of them have spiked up in the last few minutes. And one factor could be that higher amount of inflows because of this NSE rebalancing of indices that we're seeing. All three of them flying away. Mayuresh Joshi, Head Equity Research, and William O'Neill joins us on the show. Hi, Mayuresh. Good afternoon. Thanks so much for joining in. And belated happy birthday, Mayuresh. Wish you the best. Thanks so much for being a friend of the channel for the last few years. Well, any view on any of these three names? Godrej Consumer, Syngene, or Chola? They're all spiking up, so I ask you.
Afternoon, Nigel. Thank you so much for your wishes, and belated birthday wishes to Surbi as well. I think she shares the same day.
But yeah.
Thank you.
That,
Thank you very much, Mayuresh. Thank you, and wish you the same.
Thank you. So I think out of the list of stocks that you mentioned, Nigel, Chola probably stands out in our global focus lists. Obviously, the numbers were very, very encouraging in the quarter gone by. The expectations in terms of top-line growth is expected to continue very, very strongly. Capital adequacy remains extremely strong for Chola. And as a result, I think the overall return ratios should be fine. So I think Chola probably remains on our global focus list. Syngene has been a clear outperformer. Two reasons. One, I think the kind of R&D pool, both in terms of scientists, the number of companies that they probably service out of the Fortune 500, the kind of expenditure that they're probably doing in terms of new molecular development, both in terms of the CRAMS portfolio and niche products that they're probably making, holds this company out better. So yeah, I think Chola and Syngene probably stand out.
Look at the buying that's emerging in ABB. That capital goods major has been on a tear, 3% higher. For the year, it's up 65%. And remember, even the Q1 numbers by ABB were very, very strong. BEL has had a spike in the last few minutes. BEL has gained close to about 2.5%. PFC has moved to the high point of the day. Yesterday was up nearly 3-4%. It's followed it up with another 5% rally. For the Nifty per se, it's close to that 19,000 mark, but just shy of it by a couple of points. Mayuresh, ABB, I remember we spoke post the Q1 numbers as well, but since then, the stock has rallied further. Are you comfortable with owning the stock right now or buying it?
So we're comfortable owning it, Rima. Very good afternoon to you. I think the kind of numbers that they have posted, I think one of the best numbers within the larger capital goods space. And clearly, I think the kind of order book that they've probably got at this point of time, revenue visibility looks very, very good. Again, I think in terms of execution itself, the execution should be relatively better for the better part of this financial year, which means EBITDA margins in both EBIT on an absolute basis should be relatively better in FY23 compared to 22 as well. But it's run up a little bit too much for comfort. I think the last time we spoke, I think it was far lower. We obviously keep on holding it in our global focus lists. But fresh entry points at this point of time, I think better wait for declines.
Okay, all right, Mayuresh, we will have to leave it on that note. Short chat today because we're running into market closing. And it's been a historic day. But thank you for joining in. You enjoy your midweek break, and we look forward to our next Connect very, very soon. Well, as we start wrapping up what has indeed been a day for the record books, the Nifty, unfortunately, will not go home with the, that 19,000 marker because the close is just a little below that level. Not too much, but 13, 14 points away. But what a day it has been. Let's pull out the gainers tally. And you have stocks cutting across sectoral spectrum on that list. Of course, the Adani group of stocks, because of a couple of block deals that happened in Adani Green and Adani Enterprises, they were up and about. Ports saw lots of buying. So Adani Enterprises and Ports with a 5% gain apiece are the top winners on the Nifty. Metals was a strong sector right from the morning. So JSW Steel, look at a Hindalco or even a Tata Steel for that matter. Gains of 0.5% to 1% on most of those stocks. Titan was shining bright, about a 2% move over there. And then you have the big boys brigade, Reliance, Infosys, HDFC Bank, ITC is just a complete charge out there on the street. State Bank of India, TCS, HDFC itself, HUL. So I guess, Rima, I mean, not much to talk about, barring, I think, HDFC Life, which was the one big stock, big move on the way down. But there's so much happening, right, with the merger and the block trades, etc. Barring this stock, I think it was just a massive big boy party out there today.
No, absolutely. But, the good part is, look at the way the mid-cap index has picked up in the last 30 minutes. You know, till 3 o'clock, we were saying the mid-cap index is lagging. It's the large caps leading the up move today. But in the last 30 minutes or so, we've seen a big pickup. I think if we can pull up the intraday chart of the mid-cap index, the mid-cap index is ending with a gain of about 0.7%. And let me run you through some big movers. PFC, Piramal Enterprises, Polycab, REC, M&M Financial, Syngene, Apollo Tyres, Indigo, where the market capitalization has crossed 1 lakh crore mark. ABB, BEL, Chola, investment across the board. There's been a big spike in trade in the last 10 minutes in these F&O mid-cap stocks. But the only sad part is that, on such a historic day, a momentous day, the advanced decline ratio is absolutely flat, right? 1:1 in the advanced decline ratio.
Oh, absolutely. I mean, just 100 stocks separating gainers and losers on the NSE on my screen. And, that consistently came off through the course of the day. But, it's not done for the week. I mean, tomorrow is maybe a market holiday, but we come back on Friday with more in terms of market action. Momentum remains strong, and so far, so good. New highs being scaled, 19,000 in the bag. So we look forward to with optimism. Well, it's a wrap from all of us here in this edition of Closing Bell. Don't go anywhere. The focus on market continues. Sameer Arora of Helios Capital and Mark Matthews of Bank Julius Baer and Company will join us on the other side for more.